So many people trade ICT concepts and are profitable, but they're not showing you everything that they use. They're not using just ICT concepts. Think of all of the times that you have simply entered those perfect A+ setups. You enter that 1 minute inverse fair value gap and you instantly get faked out. And it's because you're missing the other half of it that all of your favorite traders use that they do not tell you. So in this video, I'm going to show you exact on-chart examples of exactly what they're doing that you're not. And at the end of this video, you'll realize the exact mistake that you and 90% of traders are making when they're entering trades, literally just like this one right here, where we are pushing down, sweeping London low. We have a 1 hour fair value gap right here that we're respecting. We have a 1 hour order block right here that we are respecting. But what ends up happening in the end? You enter off this beautiful 1 minute inverse, trade plays out, we're looking long, and we somehow instantly get stopped out. Because this trade right here is an exact A+ setup when it comes to ICT concepts. We swept out a previous session low. We're holding a 1 hour fair value gap. We're tapping into an order block. We got our 1 minute inverse up with a V-shaped recovery. Enter. Why did we simply just get stopped out? We also even just inversed a 4 hour fair value gap to the upside just a little bit ago. How could this trade fail? We just had so many confluences that showed an exact A+ setup if we were trading just ICT concepts. And that's exactly why this trade did fail, because you were just focusing on strictly ICT concepts and not actually how the market really moves. Because the market simply just does not move off of ICT concepts. You think that the people in New York are trading ICT concepts? No. For example, we have this 1 hour bearish gap. What happened? It just got inversed to the upside. We should continue this trend to the upside. This is a 1 hour gap. But then if we play it out, what happens? Why did we just dump? Why did this inverse fair value gap not continue to push price to the upside? And we see ICT concepts failing so much. Why did this liquidity sweep and this fill of this 1 hour fair value gap not push us to the upside? Why did we push down? Why did this liquidity sweep right here of all of these lows down here, why did that simply continue to push down? Why are ICT concepts failing and why are we losing these trades? And there's simply two reasons why you're losing these trades and why you're getting caught up on these ICT concepts. And it's simply because you are just looking at every single concept and every single confluence there is out there, looking for price to reject, to react off of it, and for the market to move off of those confluences. And the biggest thing of all is market structure. The market moves simply in market structure and in market trend. And if you can't actually fully understand in depth how market structure works and what price needs to do to be able to deliver up and to be able to deliver down on a day-to-day basis, you will continue to get faked out by ICT concepts day in and day out. And that's exactly why this setup of sweeping this Asian low and getting our 1 minute inverse fair value gap failed. Because yes, ICT concepts were telling us to go long here, but the actual market structure and exactly how the market moves was simply pushing bearish. As you can see, we absolutely end up ripping to the downside and continuing the entire day down. So let's break down exactly why is this bearish and why did we get faked out using our ICT concepts. We can clearly see, lining up with our bullish trade that the ICT concepts gave us, we are clearly in bullish market structure and we are clearly in a bullish trend. That all lines up. How is this wrong? And that leads me to, how does market structure actually work and how does trend actually work in the markets? Because we clearly just looked extremely bullish, but obviously it did not play out. And it comes down to three main things that are the actual reasons why the market moves up and why the market moves down. And they were not shown on that exact example. So let's break down what they are and exactly why we were bearish and why it was not bullish and why our trade and why ICT concepts were wrong. With these three things, you really want to see them from top down, from 1 all the way to 3, with 3 pretty much being the most important one that is going to allow us to actually understand the market structure and where it wants to go every single day. And once you can understand these 3 things on a high level, you can actually pair the market structure, these 3 things that I'm going to show you, and ICT concepts together to be able to not get faked out and to be able to actually find the real A+ setups all of your favorite profitable traders are taking. What is the first one? The first one is ranges. What does the market do? The market ranges, right? It ranges from lows to highs and pretty much from highs to lows, right? This right here from this low to this high is a range. This high to this low is a range. Our ranges can simply look three different ways. We can either be overextended, we can be in the premium or the discount, or the range can fully be reversing. And we need to be able to fully understand and identify all three of these so we're able to understand number two, which is equilibrium. Because when we put in a range, there is always going to be an equilibrium, which is the 50% mark. Price cannot always just move straight up or straight down. We simply need to be able to have trend. That is why it is market structure and trend that is how the market moves. And you simply cannot question that ideology at all, because there has never ever been a time that the market has simply just gone straight up or straight down. There will always be ranges that are put in, trends, and there will always be pullbacks within the market. So instead of just using fair value gaps, inverse fair value gaps, and order blocks, let's use how the market actually fucking moves. Because if we can look at this entire range right here, what do we have? We have our equilibrium point resting right here, and we can clearly see what? We can clearly see that we have not pulled back to equilibrium here. Coming into market open, we were all the way up here. So you can see we for sure want to pull back because we are overextended of this entire up range. And also, what do we have? We have an unfilled 4-hour gap resting right here. So that is a clear draw that we are overextended. Okay, we need a pullback, and now we can compare it with some of our ICT. What is their unfilled 4-hour gap? Bang, that probably wants to get targeted. What else can we look at? If we pull out our equilibrium again and we look at our internal range, what can we see? Before we made that push down, price pulled back literally almost perfectly to equilibrium. This is a perfect pullback, and what are we doing? We're simply delivering to the downside. So when you guys were using ICT concepts and you were so focused on the fact that this 4-hour gap got inverse and that we were going to start pushing up, it was just a pullback to this equilibrium level so then we could continue the trend to the downside. And that brings me to the last and the most important thing that you need to be looking for every single day, and it is simply that you need to be looking at orders. How are orders getting filled? How is the market reacting? Are buyers pushing or are sellers pushing? And you need to be able to compare that to our market structure trend, our ranges, our equilibrium, and your ICT concepts. This is the most important thing that you need to master because it's how the market moves. Orders get filled and that's how the market moves. The market doesn't just move up and down for no reason. No, it's because people are buying and people are selling. Let's look over at that first confluence. We have this 4-hour fair value gap, and it was simply getting respected. And it was doing what? We can clearly see in front of our eyes that it was filling orders and that it was pushing up. We can see that the buyers are in. So as of now, we should be bullish because why? Because this 4-hour gap got respected, and what happened? This 4-hour gap got inverse to the upside. So that's telling us no sellers stepped in within this 4-hour fair value gap. And then coming into market open, we see what? We see price absolutely tank to the downside. So that shows us what? This 4-hour gap clearly did not fill enough orders for us to push up and to continue this trend. Yeah, we inversed this 4-hour gap, but you can clearly see that there still was not enough buyers to continue all the way up. So what happened? Sellers stepped in and we pushed down. And why did sellers step in? We inversed the 4-hour gap. What happened? There was just another 1-hour gap right here that we did what? We filled it and we were able to deliver to the downside off of it. So if we can simply just take all the three things we went over and actually analyze this market, we can clearly see that our range is what? Our range is clearly overextended. We are way too high up and we need what? We need a pullback. Where's the pullback going to happen to? It's going to happen to equilibrium. What else is resting at equilibrium? An ICT concept. There is a 4-hour fair value gap. What is resting at a 4-hour fair value gap? Orders, right? So buy orders are going to most likely want to get filled here, and then we can possibly continue this trend to the upside. What else happened? We scale down to the 1-hour time frame. What we just went over. There clearly was not enough orders to push out of this 4-hour gap, but what was there? There was enough sell orders to push us back to the downside and show that we are going to continue to push down, 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 because if we wanted to continue up, we would have continued up out of that 4-hour gap and out of this 1-hour gap. So now how about maybe instead of waiting for us to sweep this Asian low and look long, we do what? We know that our orders are filled. We are clearly pushing to the downside. We should be bearish. Bang. Fill of a 5-minute fair value gap right out of market open. It does what? Sellers step in. We can clearly see that it pushes down, and we get what? We get a 1-minute inverse fair value gap, and we can do what? We can enter right there. And now instead of waiting for that Asian low to get swept and for us to look to the upside, we can simply target that Asian low. We can target that equilibrium, and we can target that 4-hour gap. The reason that this trade works to the downside is simply because we stopped looking at only ICT concepts and we looked at the market structure and the market trend and how the market actually moves. And it ends up clearly hitting this Asian low and hitting this equilibrium point. If you're targeting this Asian low, you're catching a 3.69 risk to reward. You're catching 94 points. That's probably all you need for the day. Home run trade, bang, you target all the way to equilibrium, to that 4-hour gap where orders need to get filled. 180 points, a 7 risk to reward. This is what happens when you stop focusing just on ICT concepts. So this is just a broad overview of how the market actually moves on a day-to-day basis. But if you actually want the full in-depth long tutorial on how you can learn this and how you can master it to see it every single day, I will put in the link in the description below. I do have a fully free 3-day boot camp that will get you 100% right to be able to realize and identify these perfect trades every single day within the market. But if you want to continue to just trade ICT concepts and continue to get faked out on your trades and wonder why I got faked out, I saw my 1-minute inverse fair value gap, and actually turn into a trader who trades how the market actually moves and start to see consistency and profitability. So if you did make it this far in the video, I do want to say thank you so much. If you could, it would mean the most to me if you could like and subscribe, and also leave comments of questions you have on this video or possible next videos you do want to see, because I will be looking at those comments. And once again, I hope you guys could learn something from this and put it into your trading. I will catch you guys later, and trade safe.